Good afternoon and welcome to the July Crop Production and WASDE briefing. My name is Lance Honig and I am the chair of the Agricultural Statistics Board at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're very pleased to have Dr. Justin Benavidez, USDA's Chief Economist, joining us as Secretary Designate today. We also welcome Dr. Cindy Nickerson, USDA's Deputy Chief Economist. I'd like to point out that we do have a number of visitors with us today. We've got folks from the American Farm Bureau Federation, National Corn Growers Association, congressional staff, and even producers from Tom Farms, LLC, and Blue Diamond. So thank you all for joining us today. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy, instructs policymaking officials to refrain from making public comment about these reports within 30 minutes of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone or email questions, and NASS will host a social media event at 1:30 Eastern Time this afternoon. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'll turn things over to Anthony Prilliman. He is the Associate Deputy Administrator for the Office of Analysis and Estimation at NASS, and he will be immediately followed by Dr. Mark Jekanowski, Chair of the World Ag Outlook Board. Anthony.
Thank you, Lance, and good afternoon. I want to welcome all those who have joined us here today, as well as those who have joined online. So I will be covering the July crop production report, and we'll be presenting the current forecast for wheat, barley, oats, flu-cured tobacco, apricots, and citrus. All right, before we get to the numbers in the report, let's first look at some of the data sources that we use to establish the estimates. Now, for oats, barley, and wheat, we conducted our ag yield survey, which is an operator reported survey. In July, the sample size was nearly 3,700, with data collection occurring between June 28th and July 6th. Now, for this survey, we asked producers to report their expected yield as of July 1st, or in many cases for winter wheat, their actual yields if harvest was complete. Now, for winter wheat, we also conducted our objective yield survey in 10 states. For this survey, instead of surveying farmers, we survey wheat fields. We send trained enumerators into the fields who lay out 2 units and make measurements and counts. They also clip mature heads, which are sent to the NASS Objective Yield Lab for analysis. Now, this month, we surveyed 1,155 winter wheat fields between June 24th and July 1st. And then looking at citrus, July represents our final forecast of the season. Now, in terms of Florida citrus, we use utilization data from the Florida Citrus Administration Committee, which shows the quantity of fruit packed and processed. Now, this map shows how the July ag yield samples are distributed across the U.S. As you can see, the larger sample sizes represented by the darker shade of orange are in the major small grain producing states. Now, on this slide, we are showing the percent of usable responses collected each day during the data collection window for the July Ag Yield Survey and how 2026 compares with the previous 2 years. As you can see, data collection this year was similar to what we saw in both 2025 and 2024. Now, you will see a large bump on the last day of data collection. These were mainly mail returns that were received following the July 4th holiday. All right, before we get looking at the individual crops, we did want to show the U.S. Drought Monitor map from June 30th, since it reflected conditions as of the survey reference date of July 1st. Now, in terms of winter wheat, the dry conditions indicated on the map would be considered beneficial in terms of harvesting conditions, but may be adversely impacting the other crops in those areas. All right, before we discuss the winter wheat forecast in today's report, let's look at the current condition and development of this year's crop. Now, as you know, the information presented on this slide comes from our weekly crop progress and condition survey. Each line on the graph represents the percent of the crop rated in good to excellent condition between 2020 and 2026. And then the red line represents the current year. Now, as you can see, this year's crop is currently rated lower than the previous 5 seasons. As of June 28th, 26% of the crop was rated in good to excellent condition, compared to 48% at the same time last year. All right, this graphic shows this year's winter wheat harvest and how it's progressing compared to the previous 5 years. Now, this data also comes from our weekly crop progress and condition survey. And again, 2026 is represented by that red line. Now, as of June 28th, which is the closest harvested estimate to the July 1st survey date, 48% of the crop had been harvested compared to the 5-year average pace of 39%. And then in our most current estimate that was as of this past Sunday, 59% of the crop had been harvested. All right, let's now look at the winter wheat numbers published in today's report. No changes were made to either planted or harvested acres this month compared to what we published in the acreage report last week. However, as a reminder, since our last production forecast back on June 11th, planted acreage was lowered 890,000 acres, while harvested area was lowered 805,000 acres. So as you think about the production change from June, keep in mind it's being impacted by both the change in yield compared to last month and the reduction in harvested acreage. As of July 1st, yield is forecast at 46.7 bushels per acre. That is down 0.2% or just 1/10 of a bushel from last month's forecast, and down 14.9% or 8.2 bushels from the previous year. Production is forecast at 990 million bushels. That is down 3.8% from the June forecast, mainly due to that reduction in harvested acreage, and down 29.3% from 2025. And then lastly, the bottom table on this slide shows the top 5 winter wheat producing states and how acreage, yield, and production compared to last season. All right, looking at the average U.S. yield over the past 30 years with the trend line yield plotted, you can see how this year's forecasted yield of 46.7 bushels compares to the previous years and trend. All right, this map is showing the current yield forecast by state and how it compares to the previous month's forecast. And now the top number is the current yield forecast, and the bottom number is the percent change from last month. States colored in blue are showing an increase from the previous estimate, whereas the states colored in red are showing a decrease. Now, looking across the country, you see a mixed bag in terms of states showing increases in yields from June versus those that are going down. We see mostly decreases in the lower part of the Great Plains. Now, I will point out that most of the acreage in that part of the U.S. had been harvested as of July 1st. So much of the farmer reported data in those states would have been based on actual harvested yields. You will also see a pound sign beside the Illinois and Michigan yields, indicating they are record highs for those 2 states. All right, this map is laid out the same as the previous one, but now we are comparing this month's forecasted yields to last year. And as you would expect, we see a lot of red on this map, indicating lower yields compared to the previous season. All right, looking at production over the last 10 seasons, you can see how this year's forecasted production of 990 million bushels compares to the previous years. Now, if realized, this will represent the lowest U.S. production since 1963. All right, these next 2 slides provide some information from our winter wheat objective yield survey. This slide shows the percent of samples that have been processed in the lab so far this season, which means they were mature enough to be harvested and sent to our lab for analysis. And as the chart indicates, 71% of the samples have been processed by the lab so far. This is the highest July total across this time series and 13% more than was processed last July. All right, this next chart is showing some additional data from our objective yield survey. The blue vertical bar represents the number of heads per square foot as measured by the survey. The red dot represents the yield forecast for the 10-state region that we conduct the survey in. Now, as you can see in the graphic, the July 2026 heads per square foot at 40.5 is below the previous 2 years and more in line with the 2022 and 2023 season. All right, breaking down winter wheat production by class, hard red at nearly 471 million bushels is down 5.2% from the June forecast and down 41.5% from last season. Now, I will point out, if realized, this will be the lowest hard red production in the U.S. since 1957. Soft red at 287 million bushels is down 4.3% from last month and down 18.6% from last year. And then lastly, white winter at 232 million bushels is down 0.2% from last month and down 4.9% from 2025. All right, let's now look at how today's NASS production forecast compares to the pre-report industry expectations. As a reminder, each blue dot on the chart represents an individual industry member's published expectations of winter wheat production, and then the red square represents the NASS production forecast of 990 million bushels. As you can see, the NASS forecast falls in the middle of the range, so today's numbers should not be a surprise. All right, next we'll look at other spring wheat, starting with the current condition of the crop. Again, we are looking at the percent of the acreage rated in good to excellent condition, with the red line representing 2026. As of June 28th, 59% of the acreage was rated in good to excellent condition, compared to 53% at the same time last year. As a reminder, July represents our first yield and production forecast of the season for other spring wheat. So you will not see a calculated percent change from the previous estimate in this table for those two items. Now, like winter wheat, no changes were made to either planted or harvested acres this month compared to what we published in the acreage report on June 30th. The yield forecast at 52.3 bushels per acre is up 1.2% or 0.6 of a bushel from the previous year. Production is forecast at 475 million bushels. That is down 4.4% from 2025. Now, looking at how today's forecasted yield compares to previous seasons, you can see it is up from last year and above trend. I also want to note that if realized, this will be the second highest U.S. yield on record, only behind 2024. All right, this map is comparing the current yield forecast to the previous season, specifically looking at North Dakota, which is the largest other spring wheat producing state. Yield is forecast to be up 5.5% or 3 bushels compared with the 2025 average state yield. And then this is how today's production forecast of 475 million bushels compares to the previous 9 seasons. All right, looking at how the other spring wheat production forecast compares to industry expectations, you can see that it is within the range, but higher than most had anticipated. All right, next we'll look at the durum wheat numbers. Now, like other spring wheat, this is our first yield and production forecast of the season. Now, no changes were made to either planted or harvested acres this month compared to what we published in the acreage report. The yield forecast at 39.9 bushels per acre is down 1.7% or 0.7 of a bushel from the previous year. Production is forecast at nearly 71 million bushels. That is down 17.8% from 2020. Then looking at the average U.S. yield over the past 30 years, you can see the 2026 forecasted yield is down from last year and below trend. All right, this map shows those year-over-year yield changes for durum wheat. And as you can see, all states are down or unchanged from 2025. And then this slide shows how the current production forecast compares to the previous 9 seasons. Now, today's durum production forecast is also within the range of expectations, but lower than most had anticipated. All right, let's now look at some of the other crops included in today's report. Now, for all three crops listed on this slide, July represents the first yield and production forecast of the season. As you can see, barley planted and harvested area is up from last year, but unchanged from the June acreage report. Yield at 75.9 bushels per acre is down 5.1% or 4.1 bushels from the previous season, and production is forecast at 142 million bushels. That is up 1% from last year. Looking at oats, planted and harvested area is also unchanged from the June acreage report. Yield is forecast at 72.1 bushels per acre. That is down 2.3% or 1.7 bushels from last year. However, if realized, this would represent the third highest yield on record for the U.S. And then production is expected to total 63.2 million bushels. That is down 9.2% from the previous season. And then looking at flue-cured tobacco, a harvested area at 132,000 is unchanged from the June acreage report, but down 2.2% from 2025. The forecasted yield of 2,190 pounds per acre is up 6.3% from 2025, while production at nearly 288 million pounds is up 4% from last year. And then North Carolina, which is the largest flue-cured producing state, represents 90% of the U.S. total. All right, next we'll look at apricots. Production in 2026 is forecast at 36,500 tons, down 4.6% from last year. Now, California and Washington are the only two estimating states for this crop, with California making up 93% of U.S. production. All right, as I mentioned earlier, today's report also includes our final forecast of the season for the citrus crops. All orange production is forecast at 2.61 million tons. That is up 3.2% from the previous forecast in April and up 10.8% compared to last season. Florida production is up 720,000 boxes from the April forecast. California production is up 1 million boxes, and Texas is up 180,000 boxes. Non-Valencia orange production is up 2.3% compared to the previous forecast and up 9.4% from last season. California production is up 1 million boxes from April. Now, Valencia varieties are up 5.3% from the previous forecast and up 14.8% from last year. Florida production is up 650,000 boxes from April. Grapefruit production is forecast at 313,000 tons. That is up 2.6% from the previous forecast and up 2% from last season. Lemon production at 1.11 million tons is down 0.8% from the previous forecast and down 1.9% from last season. Both California and Florida production is unchanged from the April forecast. However, Arizona is down 230,000 boxes from April. And then U.S. tangerine production at 1.26 million tons is up 3.4% from the previous forecast and up 2.2% from last season. California production is up 1 million boxes from April. All right, this slide just highlights a few of the upcoming reports we'll be releasing. On July 24th, we'll be releasing cattle on feed, as well as farm production expenditures. We'll wrap up the month of July with our agricultural prices. August 3rd will be our CARES reports. And then on August 12th, we'll be releasing cotton ginnings, and we'll be back here for the next crop production report. I will point out that the August crop production report will include the first survey-based yield forecasts for the 2026 row crops. As mentioned earlier, Lance will be on X at 1:30 today for Stat Chat, fielding any questions about the numbers in today's report. So with that, that concludes the NASS briefing. I will now turn it over to Mark, who will discuss the WASDE.
All right. Thank you, Anthony. I will now walk you through the WASDE report. Changes we made this morning. Quick highlights, as always. This month's report will incorporate all of the new information we got from NASS over the course of the past several weeks. Importantly, this month, of course, June acreage data, grain stocks, crop production data we got this morning, quarterly hogs and pigs, and other data as well. We're also going to take a little bit of a look in this presentation at the corn crop in France. Interesting story there with regard to extreme heat and dryness. So let's start out with global wheat production. World wheat production down a bit this month, down 100,000 tons. Some offsets there. We raised our production forecasts for both Russia and Ukraine based on very favorable conditions in the Black Sea region. Record winter wheat yields in both of those countries. In Russia, it's worth pointing out, though, that we raised our winter wheat production forecast, but that's partially offset by a reduction in the spring wheat forecast because it's been wet. They had a hard time getting that spring wheat crop in. Canada, that is down a bit. That is based on their area report they released in June, and then US is down as well. We'll talk about that in the next slide after this one. Global wheat balance sheet. Few things worth noting here. We already talked about production and total global supplies tightening up a little bit this month. Trade, a couple items I would note there. We raised our export forecasts for Argentina. They have very competitive prices in Argentina, supporting their export campaign there. Also raised our export forecast for Russia and Ukraine based on the large crops there. This is partially offset by reduced exports out of Canada, given the smaller crop. And then ending stocks globally tightening up 2.6 million tons. That is mainly tighter ending stocks in the US, India, Argentina, and Canada. US balance sheet. So I'm going to start with the old crop year, 25-26 on the left-hand side of that slide. Nearly final balance sheet here. Main change, main item kind of driving the changes in that balance sheet, of course, is the June 1 stocks estimate we got at the end of June. That sets the ending stocks as final for last year's crop. We also updated our export forecast based on trade data through May. So that balance sheet is nearly final, and it shows a slightly tighter ending stocks, which means a 14 million bushel reduction in carry-in stocks to the new crop year, the current year, 26-27. All of the production changes in this balance sheet are based on NASS data, including the June acreage report and the crop production information we got from the crop production report just this morning. US all wheat production down 7 million bushels this month, down 448 million bushels year over year. And at just over 1.5 billion bushels, that would be the lowest US all wheat production since 1970-71. Prices didn't change our current marketing year price for wheat. We did raise our back year price by a penny just based on NASS data. So that season average price is now final. And real quick, just to give you some perspective on the where the US total wheat production forecast stands with regard to history. As I noted, current year's forecast reaches all the way back to the early 1970s until you find a similarly small crop. Moving into rice, not a lot of changes in global rice production forecasts this month. A couple things I would note. On the old crop, 25-26, we raised our production forecast for Pakistan. That's just based on government data. But at 10 million tons, that would be record production for Pakistan. For the new crop year, 26-27, it's really just driven by changes in the US, which we will discuss in an upcoming balance sheet. The global rice balance sheet, supply and use. A few things I would note here, total rice use raised this month, 1.6 million tons. That is a record high total global rice use. Driven changes this month, driven particularly by China, where we saw some auctions of old crop rice supplies and imports of broken rice. In both cases, that rice that they're selling and acquiring through imports would be used for feed. Beginning stocks up 2 million tons. That is driven by India, where we see record ending stocks there, and also an increase in China as well. And the small reduction in global rice trade is driven mainly by lower exports out of Cambodia. So the U.S. balance sheet, starting with the old crop year, 25-26, change we made this month is fairly sharp increase in exports from where we had been in the previous months. We saw a surge in the just really in the past month or so in long grain exports of U.S. rice, mainly to Western Hemisphere destinations, and also some shipments to Iraq, an important market. And our prices are down, and we're seeing a little bit of a price advantage to South American supplies, and that has supported this recent surge in exports. With those higher exports on the back year, that tightens up beginning stocks for the new crop year, 26-27, by 3 million hundredweight. All of the production changes you see there are based on the June acreage report. Lowest U.S. rice acreage since 1972. The yield change that you see there is that is actually just based on the fact that the mix of acreage between long grain and medium short shifted with the reduction in long grain acreage. That means a relatively higher proportion of the crop is now medium short, which is higher yielding, so that raises the average U.S. yield accordingly. So that isn't any kind of an objective yield survey or anything like that. It's really just a change in the mix of acreage, mix of area across the rice classes. So with that lower rice harvested area, production tightens up quite a bit this new crop year, down almost 22 million hundredweight. Tighter U.S. supplies are going to encourage some U.S. imports. So we raised imports 4 million hundredweight. That is all long grain in our current forecasts. Domestic use down as well. Exports expected to be down a bit, also based on smaller crop, although in this case, the change we made this month is all a reduction in medium short grain rice. Still year over year, a 5 million hundredweight reduction in U.S. rice exports. Season average price for rice, we raised this month by $1.40 per hundredweight, and that is across all rice classes. So now let's move into corn, global corn production. Starting with the back year, 25-26, Argentina's corn crop, we raised 2 million tons. This is based on harvest results reported from Argentina. That crop is about 50% harvested at this point, coming in very good, strong crop. And so that's why we raised that production forecast. And then you see we have some small offsets in Mexico and South Africa, also just based on official government data. So the main change on that back year, crop being harvested in the Southern Hemisphere, Argentina crop coming in fairly strong. On the out year, 26-27, the increase in Canada by 1.8 million tons, that is based on, again, Canada's area survey. And then the EU, down 3.7 million tons. That is mostly France and also a reduction in Hungary as well. And I'll talk more about France in the upcoming slides, but then before I get there, I also want to note in terms of global corn production on the out year, Kenya has been seeing some prolonged drought in June, so their production not listed on the list of countries, but production in Kenya down as well this month. So let's take a quick little tour of European corn production here. This is just a map showing corn produced across most of the EU, but France accounts for the largest share of any individual country at about 21% of EU production. And here's just a map showing the main production regions for corn within France, kind of the France corn belt, if you will. And the story here in France, and I'm sure you've seen it in the news, it's just been incredible heat. And France has really been the epicenter of that heat. Really since mid-May, we've seen recurring heat waves. Since mid-May, these heat waves accelerated the development of the crop. In May, it hastened development and also contributed to soil moisture losses. Then things cooled down after the May heat wave, but then reoccurred in June, record-breaking heat during a critical period just prior to and during tassel. So that lowers yield prospects for that crop in France. And then again, temperatures cooled down a bit. But now we're starting to see a third heat wave emerge, as you can see there, coinciding with the silking and blister stages of corn development in France. So likely to have lasting yield impacts. So where does the heat in France rank historically? It's basically off the charts. So this is a ranking of all of the average temperatures in France for this period from June 15th through July 7th. And as you can see, the current year, 2026, is really kind of an order of magnitude higher than any previous year. And not only has it been hot, but it's also been dry. So this map, red colors, reds and browns, show low precipitation, and you can see France. It was dry throughout June and into July as well. And indeed, so it's not surprising that we can see, based on satellite imagery, that the vegetative health conditions within France look poor. And if we pan out a bit to look at across the EU, France clearly stands out as an area of poor vegetative health, but worth pointing out that there's kind of this belt of dryness across France, northern Spain into Hungary. It's dry across that whole area, so Hungary as well is seeing some stress on their corn crop. And also maybe just worth noting that it's partially offset by very good conditions when you get into when you go further south and east, and in particular Romania is looking at a very good crop this year. So in summary, corn production in France this month, we reduced our production forecast by 24% from where we were in June, and that is based on a reduction in both area and yield. And if realized, this would be France's lowest corn production since 1990. So global corn supply and use, go through this relatively quick, starting with back year 25-26. Trade estimate raised 3.7 million tons. That is based on higher exports out of the Ukraine, Argentina, Russia, and South Africa. Stocks tightening up in the old crop year, 4.7 million tons, and that mainly reflects lower stocks in the US as well as lower stocks in China, given lower imports by China. For the out year, 26-27 crop year, relatively small changes. Feed use up a bit. Some offsets there. Lower corn feed use in the EU, which isn't surprising given the smaller crop there. Offset by higher feed use in Canada, given the larger crop there. Global corn trade exports raised 2.3 million tons this month. That primarily reflects higher exports out of the US and Canada, which also corresponds to increased imports by the EU, given their smaller crop, and Kenya, given the lower production there. Ending stocks tightening up globally, 6 million metric tons, and that is mainly tighter stocks in the US. Speaking of the US, US balance sheet, starting with the old crop, 25-26. Again, kind of mainly truing up to the June 1 stocks report. So that's third quarter stocks for US corn supplies, implying a higher disappearance in that third quarter. So that's that higher feed and residual estimate you see there. Corn use for ethanol pulled back 25 million bushels in the old crop year this month, just based on recent data, both grain crushings data and data from the Energy Information Administration. And it all adds up to ending stocks tightening up 125 million bushels this month, which means beginning stocks into the new crop year, also tightening up 125 million bushels. Most of that it will be reflected in tighter ending stocks. You can see there's virtually no change to production this month, reflecting the June acreage report. Essentially unchanged from March intentions. And exports, we anticipate continued strength, strong demand for US corn. We raised our export forecast 50 million bushels. So between the tighter beginning stocks and stronger exports, that tightens ending stocks for the new crop year by 170 million bushels. Made no changes to our season average price forecasts this month. Moving into soybeans, global soybean production, everything you see here in terms of changes this month are all based on area changes. That changed in Canada, that is their June acreage report. US, of course, also our June acreage report, and not listed here, but just worth noting, area in Russia down as well. So that's another source of lower production. Global soybean balance sheet, relatively small changes to talk about this month. On the back year, I would note we raised our global crush forecast by 1.4 million tons. That is based on higher crush forecasts for China and Algeria, given their observed pace of imports. So they're importing to crush in those countries. And then we carry that higher crush into the new crop year, to assuming similar rate of growth into the new crop year. That that is reflected in that 1.1 million ton increase for 2026-2027. Again, now focusing on the new crop year, the only other item I think worth noting here, global soybean trade raised 1.2 million tons. That is mainly higher exports by the US and Brazil, partially offset by lower exports from Russia. Ending stocks tightening up globally this month, 700,000 tons, and that is mainly lower exports, tighter stocks in Brazil. US balance sheet, starting with the old crop year, we raised our export forecast 10 million bushels, just reflecting recent pace to date. And then we also raised the export forecast for the out year, increased that by 30 million bushels, again, based on carrying that higher pace into the new crop year and anticipating some higher demand. Also worth noting here, so crush was unchanged, but I'll just point out that for both years, 25 and 26 and 26, 27, we made some offsets in our US soybean meal balance sheet, where we raised our export forecast and offset by reducing our domestic soybean meal use forecast. And so that's for both crop years here, and it just reflects the fact that we've been seeing very strong exports of soybean meal, and those are continuing to grow. New crop year, 26, 27, again, production forecast just based on the June acreage report raises US supplies in total by 30 million bushels after you account for the slight reduction in beginning stocks, and then after you account for our change in exports, ending stocks are left virtually unchanged for the new crop year this month, and we made no changes to our season average price forecasts. Moving into cotton, relatively small changes for cotton this month. On the back year, we lowered Brazil's cotton production forecast, 800,000 bales. That is just based on government data, CONAB data in Brazil, truing up to their forecast. And then for the out year, 26, 27, raised Brazil's cotton production forecast by 500,000 bales, again, based on government data. The other changes you see there, Turkey, we raised 200,000 bales. Good weather in both Turkey and Uzbekistan, supporting higher yields in both of those countries. Global cotton balance sheet, really small changes this month, really mostly just truing up to recent data. I'll just note that on the back year, 25, 26, in terms of global cotton trade, we raised Brazil's exports by 300,000 bales. So that accounts for most of that 500,000 bale increase you see on that back year. And then the out year 26, 27 changes are all represent small adjustments to data across many countries. Not much story to talk about this month. US cotton balance sheet, here again on the production side, just incorporating the recent data from the June acreage report. Here again, just like with rice, we see an increase in yield, cotton yield, but that entirely reflects a change in the acreage mix across the US, a little bit lower acreage in the south west, where it's been dry, lower yielding areas there, offset by higher acreage in the southeast. So that results in nationally an increase in yield. But across the US, production raised 400,000 bales. And with no changes to any of the use categories, that goes straight into ending stocks, raising ending stocks by the equivalent amount. I didn't make any change to our out year season average price, but we did reduce our back year season average price by 0.5 cent down to 62.5 cents. As you might recall, in the cotton markets, prices really spiked in June, but then they came back down pretty quickly. So we raised our prices in earlier months, and then those prices came back down fairly. They're still above where they were, but they came down fairly sharply, and that's reflected in that small reduction in our season average price for the back year. All right, moving into sugar. Main story in the sugar balance sheet this month is a large revision in the sweetener market data that we use to determine that we rely on for U.S. sugar use and stocks information. Basically, there was a reporting error by a company that went back about 6 years in their reporting, and the error itself was relatively small on a monthly or annual basis, but it accumulated over time. So over the course of this 6-year period, it accumulated to the tune of about 145,000 ton reduction in U.S. supplies. So that is what is reflected in the beginning stocks estimate for 25-26 for the old crop year. Tightening up supplies there, reducing ending stocks by 165,000 tons. Some other minor changes across some of the other categories on that back year. Production down a bit for both beets and cane based on processor reporting. High tier imports raised 18,000 tons this month, just based on our formula, based on current pace. But those 165,000 ton tighter ending stocks for the old crop year corresponds into a similar reduction for the out year balance sheet. And importantly, July is a month where we target a 13.5% stocks to use ratio to establish Mexico's imports to the U.S. So let's go through the out year balance sheet in a little bit more detail. Talk about beginning stocks. Production also down this month, led by lower beet production. That again reflects the NAS acreage report released in June. So total supplies for the new crop year tightening up a fair amount this month. And since we target this 13.5% stocks to use ratio, we use that to determine what we will allow to be imported from Mexico. So in this case, this month, we raised Mexico's imports to the U.S. by 301,000 short tons. Worth noting that since this is July, Mexico is guaranteed only 50% of that amount, and then this will be reassessed in subsequent balance sheets. Speaking of Mexico, so this is where we stand with the Mexico sugar supply and demand balance sheet on the old crop year. Basically, they're showing a pretty strong finish to the harvest. Raised their production forecast 74,000 metric tons. Mexico exports are determined as a residual based on 2.5 months of sugar use within Mexico. So we raised and based on that formula, raised their export forecast by 102 thousand tons. And of course, on the back here, that all goes to third countries since their imports to the US have already been met for that crop year. On the new crop year, again, they're looking at pretty good conditions in the for the Mexican cane crop. No drought, increased production expected to increase from last year, and we raised this month by 94,000 metric tons. And Mexico's exports in total, we raised by 94,000 metric tons this month. Again, that's kind of based mainly on a formula based on their use. But worth noting of that, those 1.2 million, well, almost 1.3 million metric tons of exports by Mexico, most of that will come to the US. All right, moving away from crops and into livestock. Talk real quick here about the main livestock species. Beef production forecasts were lowered for both now we're moving into calendar years, of course, for both calendar year 26 and 27. For 26 in particular, just based on lower steer and heifer slaughter, which we expect to carry into the balance of the year. And then into 2027, we're also seeing we're anticipating lower placements in the second half of this year, which will tighten up supplies in 2027. So that's reflected in that 190 million pound reduction in 2027 beef production forecast. Pork production down a little bit this month, forecast reduced by 40 million pounds. This primarily is incorporating the hogs and pigs report that came out at the end of June, showing smaller pig crop, lower farrowings, lower anticipated farrowings into next year too. That is tightening up, that is expected to tighten up supplies into 2027. So again, mainly the hogs and pigs report driving our pork production changes this month. Broilers and turkey, on the other hand, increasing this month, reflecting recent hatchery data and also higher weights, especially for broilers. Strong placements, and we're expecting that to continue into 2027. In fact, we're seeing pretty strong chicken demand. I think those high beef prices are pulling chicken demand up higher than maybe we would have anticipated earlier, and seemingly more than pork demand. So more consumers potentially shifting into poultry, if to the extent that beef prices are not as affordable. Turkey, again, turkey production just for 2026 based on slaughter and hatchery data increased there by 20 million pounds, and then a small reduction going into 2027. Prices, steer prices, we raised this month for 2026, almost $1 per hundredweight based on tight fed cattle supplies. And again, expecting that strength to continue carrying into 2027. Hogs, on the other hand, seeing a little bit of weakness in the hog cutout. Again, maybe not quite as much pork demand as we had anticipated, affecting that pork cutout. And that is expected to be reflected in lower hog prices. This year, lowered our hog price forecast by $1.80 per hundredweight. Didn't make any change to next year's forecast. Broilers and turkeys, again, just truing up to recent prices, and fairly strong increase in turkey price forecast, especially for the third and fourth quarters of this year. US meat trade, really small adjustments this month, just truing up to recent data. One item I would note, broiler export forecast pulled back a bit this month. Just worth noting that we're facing pretty strong competition from Brazil in global poultry exports. So, and at the same time, strong domestic demand. So those two factors are weighing a little bit on the broiler export forecast. And then beef import forecast lowered this month, 50 million pounds, just seeing relatively tight supplies of lean trim globally. Moving into dairy, main story in the dairy market right now is continued growth in the U.S. dairy herd. Strong milk production in 2026 and expected to carry into 2027. We're also seeing continued relatively strong export demand for U.S. cheese and butter. Expecting that to continue into 2027. And strong export demand on a skim solids basis for whey. And that's behind our higher export forecasts for both 26 and 27 on a skim solids basis, both cheese and whey driving those forecasts. Stronger domestic use as well, given those the higher domestic milk production. And dairy product prices, given the higher supplies, higher domestic supplies, and with export growth expected to, level off, not quite keep pace with those, with that higher production growth, pace of milk production growth in the U.S. Seeing some pressure on dairy product prices recently, lowered prices across most all categories with the exception of dry whey, which we held steady. But worth noting there that dry whey, that's coming off of historically high, record high prices, only within the past couple of months. So those prices remain quite strong. And all of these prices historically, despite the reductions this month, remain reasonably strong. With the lower product price forecasts, the class price forecasts are reduced as well. Class 3 prices lowered based on lower cheese and whey prices, and class 4 reflects changes in butter and non-fat dry. And all milk price for 2026 lowered this month by 70 cents per hundredweight. And for 2027, looking into next year, we lowered our forecast by $1.05 per hundredweight, looking at $19.85 per hundredweight next year. We still think margins are going to be reasonably strong given low feed costs. And that's where I'm going to wrap things up for now. Thank you for your attention, and we'll see you back here next month. And with that, I'll turn it over to you guys for